Good morning, everyone. This is David Blair, the Crosshairs Trader. Thank you for joining me today. Pretty much the market's doing exactly what we've been discussing over the last couple of weeks for us Crosshairs traders. If you've been watching any of the previous videos, we've been talking about the market being in what I call a Lego market. Simply means that red candle, green candle, doji, red candle, green candle, red candle. Just a sideways, do-nothing market. We had been trading several bullish trades. I haven't had a bearish trade in a long time for the last several months. And what us Crosshairs traders do, and by the way, this is my daily chart for those who are new, and my weekly chart down here. And I look at a daily and a weekly, and on my daily I have programmed an intraday chart that fires. But what we've been looking at the last couple of weeks is a market that's been extended. One of the things that we Crosshairs traders do is what I call candle counting. Candle counting has to do with how long the price stays away from certain moving averages. It's part of my seminar and part of my training to teach you that when candle counts get extended based on certain lines that we have drawn in here, it's time to either consider lightening up or completely getting out of trades in the anticipation of a market that is going to do more than just pull back, but instead consolidate. There is a big difference between pullbacks and consolidations, and there is a way to measure those based on moving averages, which is one of the things we discuss in my seminars and webinars. But anyway, so the market, we have determined, has entered into a correction mode, so it's best to either trade lightly or not at all. These are the S&P futures. S&P futures guide us on a general market considerations and analysis, and gives us a heads up on where our individual trades could possibly end up if we decide to trade. And we do that simply because most of your stocks, a majority of them, are going to follow the general market. So we look at the general market, the futures in particular, the S&P and the NASDAQ futures, for guidance and an awareness of where the general market's going. And if we feel uncomfortable about the general market, we will not trade individual stocks. That's just our rules. That's what we abide by, and it's worked and continues to work. So we focus a lot on risk, minimizing risk, while looking for high probability trades with potential great reward. In doing so, however, we do go through periods where we just don't trade. And right now we're in one of those periods, and for good reason. All you have to do is look at the market and you can see that. But when we go to the NASDAQ, let's take a look at the NASDAQ futures. NASDAQ futures a little bit different. They've found some good support, bumped back up a little bit, still in an area that it's trying to test to see if this is resistance or support to possibly head back up to the highs, but still in not as deep of correction mode as the S&P. In fact, we could probably call this closer to a pullback mode instead of correction on the NASDAQ futures, but there is some discrepancies between the two. The Dow, and you can really see the Lego effect in the Dow: red, green, green, red, red, green, red. If the Lego market continues, it could possibly be up a little bit today or have a doji, but don't see a whole lot happening other than just sideways movement. OEX is the S&P 100. It is a good gauge of market direction. We can see here again where it hit price resistance and moving average resistance a couple of weeks ago when this correction started. Okay, So the bottom line is, right now, as far as the general market is concerned and how it affects our individual trades, there's, I went all cash before the Thanksgiving holidays. I just don't like worrying about trades and being in a market that's got a lot of uncertainty right now. I choose to have a good life outside the charts without worrying about trades. And so right now I'm not really anticipating any new trades anytime soon in the next few days, but we'll be anticipating some new ones showing up and possibly getting into some that are giving us a signal right now, which leads us to my next discussion. Let's talk about a few of these and we can see what's going on. APKT gave us an itch and a crosshair in the last few days. Here's the crosshair for those who are new. The itch simply means a crosshair from an intraday chart, hence intraday crosshair, ITCH. APKT, you can see it's had a crosshair and moving up a little, and it's had several of these over the past several months. Our weekly chart down here at the bottom has given us some strong weekly indications that what's going on the daily will continue on the weekly and vice versa. So APKT, and I'm just going to show these to you, no commentary whatsoever. I've already given you my thoughts on the general market and positions. Broadcom looks good on the weekly chart. We've actually gotten a signal on the weekly chart here, which is telling us several things are going on here on the weekly chart, to be mindful of the same things taking place on the daily chart, which we can see since that signal fired on the weekly, we've had several bullish signals, and we're getting them again on Broadcom, BRCM. CBE, same thing, looking good on the weekly chart. Everything has lined up here. Had a nice breakout. Still got some resistance from way back here though, but still is a bullish chart on the weekly for right now. And when we look at the daily, we can see we've had a nice pullback after a nice run, an itch here, a nice pullback, and now another possible run for CBE. And one of the things we do is we're always mindful of earnings, so I don't mention when earnings dates are coming up, at least not today, so keep in mind of earnings and do not trade through them, at least I don't. Amazon, one we've talked about several times over the last few weeks, several signals on the weekly chart, and now we're starting to get them again on the daily. We have been watching for a consolidation down to support here, and now it's broken out of that consolidation correction. Not everything that I look for in a trade. There's some other things that I don't particularly like about this one, but I'm going to show it to you anyway. It is breaking out and giving us another intraday signal. And one more, a less volatile stock, Nike, gave us a nice itch a few days ago. I do know, because I've been watching this one carefully, they have earnings coming up in December, so early part of December, I believe, if memory serves me correctly. But watch Nike as it has broken out to an all-time high, believe it or not, and could be making an earnings run. If you're interested in knowing a little bit more about how I analyze stocks, contact me at david@crosshairs.com. If you'd like to join Crosshairs Traders and the premium only services that I offer, please inquire about that. I'd be glad to send you an invitation to a members only webinar if you'd like to attend. Again, David at crosshairs.com. Visit me anytime at my blog. Sign up to receive my free updated post via RSS feed, Twitter, or email alert. Have a wonderful day, both in and outside the charts.